Investors are awaiting a big week of retail earnings. Names like Home Depot, Walmart, Target, many others are reporting next week. Joining us now is BMO Capital Markets' Simeon Siegel. Simeon, it's great to have you on. What are you watching for when we get this bevy of retailers that touch different consumers in different parts of the market next week?
Good to see you. Nonstop fun in August in retail. So I think that next week we're going to see a continuation of this beginning where actually you're seeing fairly okay results. You're seeing beats. They're just not translating into the stock market. So generally speaking, a lot of questions about consumer health. So far, they've been okay. I think we're going to see similar types of results. And the biggest question is going to be, do the stocks react well, or did we already get that run in the last 2 months?
What do you think? Did we get the run already?
I think the beauty is it should be winners and losers. And I know that's a nice thing to say. We haven't been able to say it in 2 years. So for the past 2 years, COVID has effectively risen everyone's boat, and then it made them all collapse. Now we're going to find out who's good and who's not. Listen, yesterday we watched one of the biggest mergers in a very long time. We watched Tapestry announce that they're picking up Capri. Capri was a very cheap stock. The valuation had come down a lot. So there's a lot of divergence here. And I think we're going to see companies like off-pricers. You had TJX up on that logo. I think they will continue to compound. I think you're watching people want value. At the same time, you're watching people want luxury. So it is interesting.
Yeah. I mean, we have seen it in some of the results so far, the fact that maybe, at least here in North America and in the U.S., the market, at least on the high-end luxury side, has been a little bit softer. I wonder what you make of that, and if that, too, feeds into that deal that was announced yesterday.
So first of all, it probably does, right? I think right now you think about Tapestry and Capri, that's primarily Coach, Michael Kors, and then also Kate Spade, Jimmy Choo, Versace, Stuart Weitzman. So different levels, but predominantly more in that accessible luxury price point. Tapestry, by buying Capri, gets access to Versace and Jimmy Choo, that higher price point that you're referring to. So listen, I think what we are seeing, the North America department store exposure right now has some problems, but it seems like those problems are more normalization post-COVID. It seems like they've been working their way through over-inventory, much more so than the easier answer of people simply aren't shopping. I think we are seeing people shop when they're being given a reason to. We look across the companies that have reported so far, there's a low single-digit growth in revenues. Most companies are doing that and growing gross margin. So it's not even simply because of promotions. I think the customer is willing to shop if they're given a reason, and we're going to see a case-by-case basis for different retailers and different segments of retail who's going to do well. That's why I bring up that divergence. That's why I think the off-price will be very interesting. Some others that are going to chase promotions, perhaps they don't have a strong brand equity, I think will tell a different story.
Yeah, and that's exactly where I was going with you, is how important are inventory levels going to be here? I mean, you've heard it from the freight operators who move all of these goods ahead of time and ahead of these key shopping seasons, saying, destocking has happened. We're starting to see some green shoots in retail and in e-commerce right now. Is your expectation that the correction has happened and that many of these names that you cover are actually in a good position for back to school and for the holiday season?
I think the easy answer is yes. The more nuanced answer is I think there's still going to be promotions. I think there's still going to be too much inventory for some, but it's not because there's a lot of inventory. It's because there's more inventory than the demand allows for it. And so what I mean by that is when COVID stopped all of the inventory from coming into the country, it didn't matter how good of a brand you were. It didn't matter how good of a management team you were. You couldn't get your product. The next year, you had too much product. So there was no distinction between who was good at doing retail and who was bad at doing retail. Now we're going to get that distinction. And what that means, I think you and I are going to see balance sheets that look clean on paper. I think we're going to see year-over-year declines in inventory because of that destocking. But just because you have less inventory than last year doesn't mean you don't still have too much. Okay. And that's where that demand forecasting is going to matter.
Okay. I got like 30 seconds left here with you. If you could pick one stock right now to buy, what would it be?
Bath & Body Works. I think right now you've got discretionary spending with the benefit of a staple element because you buy a lot of candles, their replenishment. And like Capri, cheap multiple.